We were expecting a bit of a hawkish tilt. The reason they've shocked it, they haven't actually changed interest rates or their refinance rate. That's still the same, unchanged. But the outlook, the change within the statement, they suggested, I haven't actually said this, but suggested that they may not need to end the asset purchase facility before they start hiking rates. That's how the market's interpreted it. And so we've had the euro dollar ramping back over 111 in the last hour or so. Well, as the numbers came out, we've dipped since then. We're currently trading back to 118. But that was a bit of a shock, bit of a hawkish tilt from the ECB. So let's see, I should say, what Miss Lagarde has got to say at a press conference, which is due at 3:30 in about 10 minutes' time. We've also got, obviously, weekly claims out of the US will also affect this currency, this particular pair, the euro dollar. Sorry, I haven't got the. Let me just get rid of me and bring up this particular pair, the euro dollar here, trading. Went back to 111, went as high as 111.15 before we come back down here to 110.80 at the moment. So a bit of a shock, a bit of a hawkish tilt. We recovered a wee bit. We've got initial claims expected. Again, not really market moving news now. They're back in that 230,000 area. See what the numbers come out like in about 10 minutes. And then we've also got the CPI data, which is much more of interest. If it ticks over, if the headline number ticks over this 8%, this 7.9% is expected to rise from 7.5%. That will get markets certainly hot under the collar. So see what that number comes out at in a minute or two, 7 minutes to that actual headline. Core expected up 0.5% for the month and 6.5% from 6%. Numbers out in about 5 minutes or so. So euro dollar. If we go back to the daily time frame here, obviously the political situation, the war in Ukraine has obviously had a major impact on the euro. Euro weighed, and East European countries like the zloty weighed significantly because of their response. Good afternoon, everyone. Sirin, Forex trader. Good afternoon. Hope you're well. Why are we seeing the 10-year yield decoupling for the dollar? That's a great question, Fatigue. I'll come to that in a minute. All sorts of things causing that. The 10-year yield has moved back. Well, it went all the way down. It went back to 194.70 just on the out. Let me just bring it on the outlook from the ECB. This change is hawkish tilt. So it's one of those things that happens in these very volatile events. Things don't react immediately sometimes. Like we saw the delayed reaction to the the gold market, for instance, on war. I mean, typically a worry about war, and you see safe havens like the gold rallying immediately. That didn't happen. Obviously, we had broken out technically before. Let me zoom that up a bit. Where am I here? We'd broken out from this range around the 1850. We'd broken 19, and then we rallied very significantly. Obviously, yesterday we got back to that 2070 area. But this is what happens, Fatigue. We can see this decoupling between what normally are correlated assets. So we've got one on one side. Remember what the yield is. The yield is based on the demand for the price of treasuries. So the 10-year Treasury auction yesterday, it was Wednesday. What was it yesterday? Yes, yesterday was filled at 1.92%. So that's what the demand for the market was. So we had a bit of a weakness in the Treasury market. Treasury markets are in demand when we have safe haven bid like gold and dollar and Swiss franc and the yen. But that's been mixed. It's not been a very correlated move in all these safe haven assets. We've had quite a significant bid on the dollar and the yen. That's sort of breaking down as well, as you see the dollar yen itself moving back over. Where's dollar yen here? Dollar yen moving back over 116 in the last few days. That's the daily chart. There we are. This is dollar yen back over 116 in the last few days. So we've rallied up here quite significantly. So the dollar outbidding the yen as far as safe haven assets concerned. But it just happens sometimes. So don't get too fixated about these correlations being fixed. They do break down from time to time. We've got this lots of uncertainty. Obviously, there's the uncertainty of the war, there's the uncertainty of that economic impact. We've got a huge number of migrants now, 2 million out of Ukraine. That's significantly affecting Europe. So, well, why would that affect the dollar? And why would that affect dollar yields? Well, it has obviously a knock-on effect. We've got all these big corporate American companies as well withdrawing from Russia. Russia's not a massive economy, but it's a growing middle-income country. Some American companies more heavily invested there than others. Others are still staying there. They haven't actually announced any removal of business. So there's that uncertainty. There's obviously the massive stimulus or money investment that Biden is trying to get for his own US economy before this war came along. There's then obviously been that commitment to the Ukrainian people and to NATO, replenish all these, ammunition and munitions for Ukraine. At the moment, obviously, clearly, NATO hasn't been involved militarily. That's a very, very major step. Whether that actually comes over the next few weeks, again, only time will tell. At the moment, it's looking quite unlikely, and so we get this. That would then move pressure on to buy US Treasuries. It's one of the safest investments you can make. So therefore, you would argue that the 10-year should be going down, and in fact, it's gone up. So that's what happens. That's just simply what happens to fatigue sometimes. So don't get too hung up on what the rules say, what the textbooks say. Markets do what markets do, and they often react in a very strange way sometimes. So thank you for your question. That's a great question. Good afternoon, good life. Hope you're well. RGN collections, RGN. What about gold, please? So gold, as I said earlier, rallied earlier in the week significantly to 12.2075. We sold off quite significantly yesterday. This is the gold on the daily time frame here. We sold off quite significantly yesterday. Big down day yesterday. You can see if I zoom this in a wee bit, you can see a very significant up day on Tuesday, only for a very more significant down day technically yesterday. See how let me zoom this up and see what I'm talking about. See how the closing price of the candle here, just looking at candle analysis, the closing price yesterday and the high price open yesterday was actually engulfed all of the body of the candle Tuesday. So that's a negative setup here after having had 4 consecutive days to the upside. The big final blowout. We can't get over 2070. Shook out yesterday, back under 2000. 2000, a big psychological number. We've bounced a wee bit today, but gold remains bid. Here, the 20-day moving average, the middle of the Bollinger Band here, sits all the way down there at 1923. So gold remains very much bid on this safe haven and the uncertain outlook. Right, I'm just going to check my calendar, see how this data comes across, and I'll come back to your questions, guys, in a minute. Let me just take that gold to the 1 hour time frame. So here, there's that 1980 level we talked about many times last year, and we're back struggling with 2000 at the moment. So still a minute or so to go before the US data comes out, and Miss Lagarde starts her press conference as well. The PC's TV is behind me at the moment, so just hang on for that for a minute. So let's have a look at gold. Somebody's asking about dollar CAD, I think, as well. Who's asking about dollar CAD? It was dollar CAD. So I compare with my analysis of Zumbaro. Well, again, I don't know what time frame you're talking about, Abu Bakr, but that looks. This is dollar CAD on the daily time frame. Again, driven, obviously, we had that massive sell-off in the oil market yesterday, 17% in some markets. The oil fell yesterday. That's obviously weighed on dollar and the CAD. Obviously, the CAD more than the dollar, but certainly weighed on this pair. So again, another one that was up consecutively. The dollar accrued very significantly for 4 significant days, ran to 129, big round number again. Couldn't hold it. There we go. There's 129 itself. 129. I don't know what was 129. Yeah, 129 Tuesday. Reversed again. A similar reversal to what we saw on gold and moved down under 128. So a big 100 pip decline yesterday, but it's still bid here on the daily time frame because of this move up from the 126 zone. So 126.70. Abu Bakr, I'll come back to it. Let me just check my data because it's come across. So What are we doing? Let's start with inflation. It's the hot topic that everyone's been waiting for, and it's still not through. So claims are a bit worse than expected, 227,000 compared to 216,000 last time, and a revision up by 1,000 from last week to 216,000 as well. So they're 13,000 worse than expected, but it's not a massive out of the variance. Continuing claims have risen to 1.49 million. That's quite a significant rise, actually, the continuing claims, the ongoing longer term unemployment. But inflation remains at 7.9. I say remains at 7.9%. So it hasn't breached the key psychological 8%. So it's remained at 7.9%. The headline number. Core is, excluding food and energy, is 6.4%. That's in line with expectations. And the monthly February number is also at half of 1%, 0.5 of 1%, 5 basis points. And again, that's down from January on a positive note, but in line with expectations. So that's okay. That's not perhaps, well, it's hot. It's still at 40-year highs, don't get me wrong. But it's not quite as hot as it could have been, and it hasn't gone over that psychological 8%. So 7.9%, still one of the hottest CPI numbers in the developed. I think, in fact, it is the hottest number out there at the moment on the CPI basis. But all countries don't measure it exactly the same. But as far as the US CPI is concerned, year on year for February, 7.9%. That's the one that's going to grab the headlines as we move forward. I say claims missed, both the weekly claims and the ongoing claims. The 4-week average also ticked up a bit to 231,000. So that's a hot, tight. So what's it saying? Well, it's more of the same, basically. The outcome of that for the US data is more of the same. So it's more indication of a hot jobs market. It slipped a wee bit, but it's still in the ballpark. And inflation is still hot. It hasn't gone away, and there's no sign of it cooling. The only positive caveat one could take from that is perhaps the what was it? It was the core number was a bit, it tipped down a bit, but that's taken out food and energy. So they're two big components. You can't do that really, can we? Massive input. The energy cost for ongoing inflation. Less so in America than in Europe and other parts of the world, but certainly it's still a significant input. Rent's quite significant. So Ms. Lagarde is not yet at her microphone. So US data, not as good as expected, but still fairly hot. But as far as the dollar CAD's concerned, we're down 127.80 and moving lower on the dollar CAD number. Right, let me get all those questions. There's a few questions coming here now. Sirin, good morning to you, sir. Hope you're well. Anything you want to have a look at, let me know. Hello, my friend in India. How are you? Subhamo, tell me about dollar yen. So, dollar yen, let's have a look. So, dollar yen, as I said earlier, it breached the 116 area, the key 116 handle earlier today on the expectation of this deal, not a deal, but the speaking, the foreign ministries of Ukraine and Russia were speaking. That took the safe haven bid away from the yen. A bit of positivity. We had a massive rally in stock markets yesterday. The Nikkei this morning in Japan was up 3.8%. The Nasdaq yesterday was up 3 and a bit percent. The S&P recovered 2.5% yesterday, 100-point move plus for the S&P 500. So all of that was a bit of a safe or risk-on sort of move. Therefore, that dented the yen, and so we continue this rally today from the last 3 days from under 115 to over 116. We've since cooled there. We're at 115.87. So Subhama, I don't know what time frame you're trading at, but on the daily time frame, you see it's still well bid, way over the top of its 20-day moving average here at 115.28. So that's your major support. Obviously, 116 is a big psychological support. If we come down the time frames, 4-hour should also be positive here. Indeed, it is. Here you can see now the Bollinger Bands have moved up. They're sloping up. Top of the Bollinger Band sloping. It rolled over a wee bit here as we've got to 116 and stalled. But again, even on this the 5 and the 9 EMAs, which we've got on here. This is the yellow line here is the 9 period exponential moving average, and the green line is the 5 period moving average. So again, that's crossed. That first went positive here on the 4-hour time frame. Here, if you were trading this strategy here, where's that? That's on the 7th at 8 o'clock. Reversed a wee bit, but your stop loss has still been down there as we'd moved up, and we trailed that up as the move has gone to 116. So that remains bid on the 4-hour. The 1-hour may have rolled over. Indeed, yeah, it's trying to test the 20-hour moving average here where we are at the moment at this. I've got two lines in here. I've got a red line and a green line on here. Oh, never mind. Yeah, 115.90. All right, that's the spread. Obviously, I've got that word. That's the spread. So 115.90 is where we trade at the moment on the 1-hour. Ran out of steam at 116, but still relatively well bid. If we go down to the 15-minute, I'll turn around a bit more aggressively. Indeed, it did. That would have gone under its moving average, bottom half of the Bollinger Band this morning, and it's been under there ever since, basically. So it's tilting down that time frame. So depending on your time frame, Subhami, it's still bid on the higher time frame. So be careful going trading against that trend. Gold we had a look at. Dollar CAD we just had a look at for Subaru. Did I answer your question, Abu Bakr? Let me go back to dollar CAD. So this is the 1-hour on dollar CAD, and it's been under it's slipped again, and we're under 128 on that news. So we currently trade at 127.88. So that's ticking down intraday. Let me just put the daily. So that was yesterday's decline, and we've really been going sideways today. Supported at 128, but now we've breached that support, and we're now pushing low. See these two fractals here on the 1-hour time frame. Price is currently right at those, so that's biased to the downside. The MACD remains under the 0 line. Signal line is flat. Stochastics can't move up, and they're trending lower, and the RSI at 40 is trending lower as well. So intraday, that's biased to the downside. Subaru on Musar. What is the current situation of things between Russia and Ukraine? Well, it's not very nice, is it? The Russians yesterday missiled or bombed, fired tank missiles, whatever you want to call it, at a hospital, a maternity hospital. 1 child's been killed and 3 patients were killed. So it's not great at all, is it? EU has been riding up. Could it be war is dying down? What happens, Abu Musa, unfortunately, is that markets are very brutal. Our markets are brutal. They get a bit of war fatigue, and we saw possibly the rally in the stock markets yesterday was a sign of that. We are 2 weeks into this horrible conflict, what markets do is price in the risk, price in the worry, price in the uncertainty. Uncertainty is the big thing that they hate more than anything. Let me just make me up. It's the big thing that they hate more than anything, the uncertainty. So perhaps all of that is being priced in at the moment, or they've reacted. Markets tend to overreact. There's a big rally in the yields and gold and yen and dollar, and they've all cooled away a bit. But they cool perhaps as quickly as they've rallied. So overreaction, cooling to some sort of new level. Who knows? It's obviously a long way to go in this, but the euro is very much under pressure until there's some clarification of what's going on in Ukraine, which could take weeks and months, unfortunately. But the ECB is the other main driver of the euro, and they've come out much more hawkishly than the market was expecting today, on the back of probably what's going on in. Not probably what's going on. What is going on in Ukraine? Can I zoom that up? As you can see, we were here, beginning of February, we were, rallying up 114, 115. We'd been to 114.85 here in January. December, we were going sideways. We had been as high as 117 back in October. But the war, threat of war, worried the markets. We declined in those first. Is that the daily time frame? Yes. So for 2 weeks, we've obviously been down on the worry of war, and we went all the way down here to 108. And we've just bounced off that in the last couple of days. So Euro had a huge response yesterday on the positive news of the meeting, some positive news perhaps around the oil prices and Venezuela, Iran supply getting involved, Saudi Arabia possibly getting involved. There was talk yesterday of the UAE pumping more oil. That's been a bit turned down again today. But anyway, all of that has lifted the euro yesterday significantly back to 111, but we're still down. So we remain weak. This is the Bollinger Band. If I can zoom this, let me zoom this in on the daily time frame. You see big, massive volatility. We're in the second half, lower half of the Bollinger Band. We remain well under the 20-day moving average, which sits all the way up there at 111.90, so just shy of 112. So euro remains pressured on that, my friend. Sorry, I didn't show you the chart, did I? Sorry. Let's go back. Sorry, I missed. Sorry. So again, so euro's been all the way down here to 108. We're back to 111 today, so it's a significant 300 pip recovery, but we remain weak with the 20-day moving average. Again, just look at this purely technically. The 20-day moving average in the middle of the Bollinger Band up there at 111.90, so 10 pip short 112. So we're still way below that, even though we did have a big, strong recovery yesterday. It's still biased to the downside. Even we followed through a bit today so far on what the Fed have got to say, the ECB have got to say, and ahead of Miss Lagarde, she's on the podium at the moment. Global recovery, fiscal aid also helping economy. That's talking about PEP. No fatigue. The Fed is talking about hiking rates 75 basis points this year. Some are talking about 100 basis points by July still. Bullard's still talking about 100 basis points by July. No fatigue. Why haven't we seen a more significant gain in the dollar, or does the market already have that priced in? Absolutely. The market has not got it priced in already, but the market has moved more on the uncertainty because of the war than on the Fed, ironically. Obviously, we've been moving. This is the dollar index, no fatigue. Let me just put on the daily time. Let me just put the period separate so I get my feel for where we are. So here, December, January, February. So we were really, for those 3 months, weren't we? We were idling through. It wasn't much of a move, was it? So we were sort of idling through this level here, weren't we? Around about 95, 96. Couldn't really get much higher. Didn't really want to move much lower. So 96. A move from 96 all the way to 99 is a massive move for the dollar index. And that's moved up into the month end and obviously during the last 2 weeks as the war has erupted. So that's a bid on the dollar, but also a weakness in the euro, which is why the dollar index recovered or declined like it did yesterday. Because the dollar index is it's only 6 currencies, a weighted 6 currencies, and the dollar and the euro takes up over 50% of that. So it's badly weighted. Many people argue. But interesting to see, we covered most of that gap from earlier in the week, but there's still a gap down there to 97.70 technically, which we've tested intraday today. So those gaps are now getting filled. But anyway, the dollar remains, currency of safe haven, and therefore it's up. But a lot of this news has been Fed out fatigue. So yes, your answer is correct. The market's already priced a lot of this in. Remember, 6 months ago, we were talking about possible rate hikes in 2022. Then it went to 2, then it went to 3. Then you're talking about 5, some were talking about 7. The war erupted, and that's changed things quite significantly. But the upside, from the dollar is concerned, that reflects positivity for the dollar, because in these uncertain times, what do investors do? They've got to be invested. They move to the safer currencies. The yields on the safer investments in things like US Treasuries, and therefore the dollar gets that bid on that uncertainty. So yes, whether we get that whether we get that high this year with 75 basis points, whether we get 100 basis points, whether they only get 50 basis points now. Remember, we were talking about 50 basis points in March just a few weeks ago. That's off the table now completely. So as I say, see where we go from here. But trade what you see, not what you think. So that had been long. Big shakeout yesterday, and again, if you were trading this, for instance, if you were just trading the rules on this one, you would have been long here initially on the 23rd of. Is that the 23rd of February? That can't be the 23rd of February. Yeah, the 23rd of February before as the war was starting to ramp up, but we hadn't broken out of our range still. So as the dollar index again, the day of the invasion, we ramped up very aggressively, and we haven't looked back since, basically. So that's still long, but lots of profit might have been taken yesterday and the close of the day yesterday as that big candle formed yesterday. But again, it still remains bid, and that's, for me, really, that's that key support level now at 97.25, that high here, taking us back into January. So January's high, that resistance area here towards the end of February at 97.25 is the big technical support level before we then go down to the 20-day moving average at 96.95, so just under 97. And then the 50-day moving average, which sits at 96.50. And then we come back to 96 itself, which is that pivot area for the last 3 months, basically. Okay, so there we go. Dollar remains bid, no fatigue, my friend. Cooper, hello. How are you? Long time no see. May I please get a euro, yen, and silver weekly and 1 hour time frame, please? And thank you. That's a great sort of question. I know what to look at. I know what asset to look at. I know what time frame to look at. And thank you as well, Cooper, my friend. So let's start with euro, yen. Euro, yen. So let's go to the hardy time frame. You're saying the weekly time frame. So we've had 2 weeks of the war. We've had a bid for the yen, certainly for 2 weeks plus. And this pair obviously came out of its range in the last 2 weeks. So we had some sort of support here. Let's have a look on the weekly time frame. Where's my line? There we are. So this is the bottom of our channel. Very crudishly, since when's this? This is taking us back to October. Yeah, so this is the bottom of our channel. Sorry, top of our channel was up here at 132 plus 130, 132.50, say. The bottom of the channel was round about here, 128. It's 128 too low here. 128 is a bit too low, but no, 128 was the low. So here, October, November, December, in that channel, obviously a big sell-off last week. We also bounced back into the channel, one would argue. If I put that, let me put that at 128, the round number. So we're back into that now as we trade now at 128.34. So 128 is obviously that support is holding. Here you can see here for 3 or 4 weeks it went under it towards the end of the year, but we recovered. But can get over 132.50. So that's the channel on the weekly. We've broken out that. Now we're back into it. So that's your sideways oscillator. That's your big weekly support at 128. So if we go down to your trading time frame, the 1 hour time frame, you can see we've recovered that today. So that's a remember 128, a big weekly support. So having been out of that here on this, zoom this in, on this 1 hour time frame for where are we? This is from March the 4th. So 4th, 5th, 6th, 7th. So a few days here. We've now back to this level. So this is your key support level, 128 itself. Today, at the moment, and from yesterday, we don't really want to break over 129.40. Let's look there where those fractal highs are and the tops of the candles. Through here, 125. Well, we don't call it 128.50 for round number. See how the candles haven't closed or got to 128.50. So that's a significant level, which we did break here as the news broke from the ECB. So the bullish ECB intraday has broken over that 128.50. We spiked to 128.86, and we're coming down as Miss Lagarde is still on the podium. She's just said, war is a substantial upside risk to inflation. So there we go. So euro, just to answer your question. So euro yen today, it's sliding sideways, bid back up based on the ECB, but it's losing that cool. So that's your key level, 128. 50, which we're under at the moment, and then the key 128 level itself going forward. The hourly is on MACD. The signal line is still drifting. The stochastic, take that off, that's annoying me. The stochastic has started to move up from the lows here earlier today from 128 and moving up, so that's still positive. But the RSI has rolled over and moving down, so it's sort of edging down. So as 128.50s broke, obviously immediately, I'll zoom this up. Before we get down to before we get down to the 128 round number, you've got the 20-hour, the 5-hour, and virtually the 8-hour moving average, all congesting here, my friend, around about 128.25. So that's a key little support area there on your 1-hour chart. Then 128, and then today we've actually on an end of day basis, an end of hour basis, I should say, we've closed as low as 127.85. So there are your three levels of support as what price action has done so far today. So 127.77, I say. So let's call it 127.80, 128, and then that congestion with the moving averages there. The most important one being the 20-hour moving average, which sits at 128.24.75. So that's your 1-hour areas. Okay, silver was the other. I know I haven't got a silver chart, so let me change. Insert metals futures spot for gold, silver. Silver, I put the same template on the one we're looking at, 59 cross. So today we're up to I haven't sold off yesterday silver. Is that low for yesterday? Let me just come back. That. Right, that's the 1 hour. Let's go to the weekly, you said, didn't you? So the weekly for silver will remain bid, as you can see. So it's 1, 2, 3, 4, 4 very, very strong weeks. Took us over 25, 30. We went as high as 26 something, then we even over 27, I think. 26.95 is that one on this week thus far. So the weekly remains bid. Cooper. The daily remains very bid as well, as you can see here. Nice, that's a lovely trending chart, breaking its 20-day moving average. Weekly tested back down, and then a strong day here, whatever day that was that before the war? That was the 11th of February. Silver was looking perky as obviously as the war hit here on the 24th. We went as high as 125.75. But we've been higher from that since. So again, another one trending higher. Big rally again on the Tuesday, as we saw with gold. Retraced quite significantly yesterday. But interestingly, look how the body of the candle on the silver market has been engulfed. The negative candle has been engulfed by the positive candle from Tuesday. So that remains significantly bid. And as you can see, our support there, 125.30 from that beginning of March, big candle here on the 1st of March, remains support. We're currently trading at 25.40.85. So again, bid. So that's the daily from the weekly. Go down to your trading 1 hour time frame and zoom in. Zoom in. Again, that's yesterday. This was a Tuesday, yesterday high. Now we sold off yesterday, intraday. Big move down, and now we've just had a break here on the 1 hour time frame. Big, strong, engulfing candle here at 12 o'clock, breaking over 25.75, retracing the last couple of hours, but again, that remains bid as it's over the 20-hour moving average. Support today for silver sits down there at the 20-hour moving average at 59.80. Resistance, as we've ran into, is the top of the Bollinger Band there at 25.90. So it remains bid, but it's cooled in the last few hours. There's a big candle. You might see a bit more retrace on that one, but silver remains gold on that 1 hour time frame. Cooper, I hope that's answered your question. No fatigue. I'm suffering a bit of fatigue here myself. my friend. I bought Aussie yen on the 4-hour time frame at 83.70. Do you think I make 86.95? And what's causing the Victoria to be so strong around the board? Thank you. Let's have a look. Right, the Aussie's got a lift, my friend. Remember, Aussie yen is the most. Where's the Aussie yen gone? No, I don't know if I've got it here. Actually, I have to open a new chart. I haven't got it here. The Aussie yen, remember, is the most risk sensitive of all the currencies. So let's just bring in a new chart. Oh, Aussie yen. Let's add that template we've been playing with today. So if we look at the day, let's go back to the daily chart for the Aussie. Actually, just go to your time frame, 4-hour. So you can see. So first you send 4 hours. So what's the other markets doing? Well, the daily time frame, no fatigue, is bid. So you're with the trend on your 4 hour without question, aren't you? There's the 20-day moving average rolling up quite nicely. It's been a strong March, nicely angled. Bollinger Band's moving up. We're pushing out the top of the Bollinger Band, breaking new fractal highs. New fractal high was pushed here on Monday at 85.65. So your buy with the Your buy with the Aussie on the 4 hour. What did you say you were in at 83.70? Let's just put that on there for you. 83.70 all the way. Oh, you're showing off, my friend, aren't you? 83.70's down here somewhere. Well done, my friend. So I don't know whether did you stay in this or where's 83.70? 83.70 here on the 4 hour. Okay, so I don't know whether you're talking to that from you got in here on this break here, which is that fits with my mentality. New fractal, 3 fractal highs broken here. In fact, it would have been the end of that candle, to be honest, on the third. But that's rallied. I don't know whether you've got in before on the dip here, down yesterday. If you have, well done. But it's bid, and it's punching new highs from yesterday. So Aussie on the weakening yen because of the bit on of a risk-on mode yesterday. You would expect this to move up. So today we've been down, we've been back up. So 85.50 is the next line in the sand. Do you think it'll make 86.95? Let's have a look where 86.95 takes us. 86.95. Let's mark it on the chart first. 86.95 is all the way up there. What's the higher time frame doing? So let's have a look. Where does that fit in the higher time frame? On the weekly chart, it's still quite off the board. It takes us way off here, so it looks a bit stretched to me. But we need to break where we are now. Basically, this 85.50 first. Clearly, I'm sure you're aware of that. No fatigue, my friend. So when were we last here? That's what I would always say. When were we last here? I mean, it could be I don't know how you're finding that target, whether it's a Fibonacci extension or an Elliott wave extension. Let me zoom in here. So when were we last here? So it's a long, long way away, isn't it? Let me go to this is the weekly. We got the monthly and zoom up. So it's one would argue it's a bit of a stretch to 86.95. Okay, 86.95. We were last here. Takes us back to March or even February 2018. So there's a multi-year high here. 2018, February 2018. But when we did get to this level, it's 86.95. We went through 86. And for the second half of July, we were testing 88 itself. So it's not out of the question, but it's on a 4 hour time frame. It's a very extended move. That's certainly for sure, my friend. But obviously, you trade what you see, not what you think. But here on a 4 hour, where's my insert? Where's my Fibonacci levels on? Small little Fibonacci here. So on this simple, 4 hour Fibonacci levels takes us to 86.56. So don't get too greedy. 86.60 for me on the 4 hour time frame seems much more attainable than your 86.95. But that's obviously it's down to you. But you've been certainly, if you've got in down here at 83.70, you're very much in the money and happy to go there. The caveat would be if there's, the rally would help you if there's a sudden de-escalation of tensions. Tensions between China and Taiwan, for instance, also dissipated if the war ended. So that would certainly rally the Aussie yen to the higher side. But certainly I would say 86.60, much more attainable than that 86.95 on your 4-hour time frame. But certainly the Aussie has also got a lift, to answer your second part of your question, because of the massive rally we've had in commodities, gold, silver. I've just been looking at, obviously, Australia is a major supplier of coal and iron ore to China, so in particular, but a big commodity provider as well, hard commodity provider. So that Aussie always gets a lift when the commodity markets lift. And remember, we've had these massive moves in things like, Andrew's got palladium here on this chart. We've had these massive moves in things like palladium and platinum and the commodity complex in general. So here, palladium, massive rally this week. So yeah, that's why basically, my friend, I'm sure you know that. So yeah, Aussie yen, first target is 85.50 from beginning of the March, so new March high. And at the moment, as you can see here, well, I hope you can see here, that's going to be quite not easy to breach, simply because the flat moving average of the top of the Bollinger Band is horizontal. That suggests not move. So we've been basically oscillating from the top to the bottom through the midline to the bottom of the Bollinger Band. And we bounced up. We're back over the middle of the Bollinger Band, retraced a wee bit. And the last three candles have been very positive to the upside. No fatigue. So yeah, 85.50 would be my first target. Then perhaps 86.60, and your 86.93 or 86. What was it? 86.95. Bit of a stretch for a 4-hour chart, but it's your call, my friend. Any more questions? No more questions at the moment. That's good. Let me just go back, make sure I checked everybody. Yeah, there's nobody on Facebook, I don't think. No questions on Facebook today. So I'll just go back. Let me just check. Yen, we talked about yields, we've talked about dollar CAD, we talked about the Fed, we talked about ECB. Miss Lagarde is speaking at the moment. Let's go back to the euro, obviously the most sensitive of the currencies. So that's our intraday, our 15-minute chart. So this is the rate announcement. No change to the rate announcement, but a very bullish, hawkish statement took us over the 111, and we spiked intraday at 111.21 here on our chart. Let me just change that. Change that. Oh, it says so. 111.20 was our high for the day. Then we retraced quite significantly and under 111, and we're moving back down to the range where we've been for the last couple of days, to be honest. So let me just put the period separators on there. There we are. That's today. So back to this 111 sort of 80 zone, 4-hour. Again, ran to 111, ran out of steam, but still remains bid, and the daily still weak, and as I said, needs to get back over to move higher at 111.90, 112 the next big line in the sand for the euro dollar on that. Did we look at gold for RGN? I'm not sure we did. RGN. Let's have a look at. I'm not sure if you're still here, my friend. I'm not sure. I can't remember if I did, to be honest. We did, didn't we? We talked about this 2070 level. Yeah, no, we're under 2,000 quite significantly today. Let's again just put the period separators. See that? There we are. So back under 2,000. Here, where we are now, we're about 1998 zone. So we're back under that at the moment. So it's ticked higher, rolled over, put in a fractal high today. So 2009 was too high. The move today, by the looks of things, it's tested it for 3 hours and it's come back down off 2009. So that's a resistance if we do move higher again today. But we've certainly supported down there under 2000 at 1986 on the 1 hour time frame. That breaks them back to test the low of the day, which took us, the actual low of the day this morning, took us all the way down to 1970 again on the gold market. So there we go. So let me just recap the news. So the ECB, no change to interest rates, no change to the overnight rate or the refinancing rate, but the statement was much more hawkish than the market was expecting. It took out the statement about waiting for the PEPP, their asset purchase facility, to be finished before they would look at increasing interest rates. Didn't say they were going to increase interest rates before they did that, but markets are now looking at the end of asset purchases during the second, possibly second, but probably third quarter this year, and possibly interest rate hikes before the end of the year out of the ECB. It's something unheard of not that long ago. So that's given euro a lift. Let me see. Continued from yesterday. It's euro. Giving euro a lift after yesterday's big rally. Somebody did know something. We went back to 111, 111.20. We've cooled since then to 110.60. So given a quite significant bit. Probably on the hot inflation out of the United States, the other big news today, 7.9%, in line with expectations, not over the psychological 8%, but the monthly number was in line as well at 0.5 of 1%, and the core number, taking out food and the important food and energy number, the volatility you get with that, was 6.4%, so still a hot 40-year high number for US inflation. 7.9% is the headline number that's going to be grabbed and copied around the world on headlines in news. And there's a slight dip also in the initial claims this week, 11,000 missed. So we're back to 227,000. It's still around the average for a normal economic cycle, 230,000. So it's not, although it's missed by 11,000, it's not too much to worry about. And the continuing claims also missed, but that was a bit more significant, so it might be a bit more of a worry. I was expected to come down to 1.33 million, and it's ticked up again to 1.494 million, so that may be a bit more of a concern, although it's less market influential. It's also a week later, it's from February the 23rd, not March the 4th last week. So anyway, there we go. Any final questions before I call it a day? No. Let's have a look. So let me just refresh this so I can see you. Doesn't look like it's covered everything. Okay, take care, everyone. Stay safe, and we'll see you all again tomorrow. Andrew will be on tomorrow for a weekly wrap. A very busy week. Obviously, big news today has been the inflation number and the surprise from the ECB. So, say how markets sort of cool or don't cool or react to that data later. So let's just finish with the futures market. The S&P 500 continues to decline from the breach of the 20-hour moving average earlier today. On that, there we go. That moved down here this morning, European time, and equities continue to decline. 4,222 is the US futures at the moment for the S&P 500. Bitcoin, I was asked about Bitcoin. Bitcoin out of its key 40,000, 42,000, 45,000. The 45,000, 42,000 is a key daily channel. We got to it yesterday, couldn't hold the 42,000. We sold off this morning, and again, another one that's continuing to decline under 40,000 now, and back into this 38,000, 39,000 range we were in on Tuesday before Wednesday's rally. And Thursday's decline, so some nice moves there. Again, if you just trend following that up in the top half of the Bollinger Band, now in the lower half of the Bollinger Band and down. Big old squeeze here before classic, then move right down. So trending or following technical analysis quite strongly there, old Bitcoin to the downside. So let me leave you with the euro. As it's euro and ECB day, I'll go and catch the end of what Ms. Lagarde's got to say. She's still chatting on it. She says she is indeed. So take care, everyone. Is there any final requests before I go? Doesn't look like it. Okay, take care, everyone. We'll see you all again tomorrow with Andrea, and stay safe, everyone. All the best. Bye bye.